This is your weekly market prep for 10/29/2023, where we discuss the key levels, market moving events. We discuss how we did last week, the setups, the profits made, lessons learned, and what are the levels, the trade plan, what are we looking to execute, and how do we come out every single week green with high profits. What do we do? We're going to get into it. Are you ready? All right, let's get it. All right, so this is your weekly prep for October 29th, the week of. Now, keep in mind, last week we did upwards of 60 grand in the market. If you had just taken one trade or one contract along with all the trades, you would have made to the low side 6 grand. If you would have taken 10 contracts, I'm in lots of 10, 15, 20, and 25, then you would have done in upwards of 62K. Options only morning trades, and that doesn't include the futures. All right, so watch our weekly prep video from last week. All right, so 2 videos. Look at our recap. You can see that here. And then these levels and trade plan are gold. Go watch that. Now that's going to give you the levels and understanding from last week. You'll want that because you need to know what we had, or what was our sentiment and thesis for last week, to build on that so that you're ready for this week. All right. So this is our weekly prep for the week. Let's get after it. All right, here's our agenda. This is what we're going to talk about. Last week's action. All right. The news, the sentiment, what went down. We have a video there in the previous screen. Go watch it, right? We made about 62K, more than that last week, and we recapped each one of those days. And we also had a couple of recaps there, 8K and a couple trades here and there. So go watch those videos, go through the channel list. All right. What do we look forward to this week? All right. Sentiment, levels, plan, all that stuff. Then we're going to talk about what our members are saying about us, a new testimonial from some folks that are getting the training. They're understanding the VVP trading system, and then they are going to the bank. And then what are they using to help them along? Something that's not lagging, that's not a crutch, that helps you. That's going to be our indicators here. And then we're going to wrap up with free and paid training. We're going to talk about our levels and action plan. All right. So here are some major events to watch this week. Now, consumer confidence, Treasury refunding announcement, FOMC announcement, obviously, and then the press conference to follow. JOLTS, obviously. And then we've got jobless claims and non-farm payroll. All right, you'll want to look at these data events this week and market movers. The big driver for the week will also be earnings, bonds, geopolitical news. All right, so here we go. Monday, nothing cooking. Right now, we traded today. We got an awesome move, over 100%. I'm going to do a trade recap to help you understand how we got that trade today. This was live in front of the entire Discord, and in the free channel. Call out there 933 for a quick 15%. But then inside the private channel, we went to the bank, and that's just the first 2 trades for the morning. After that, we went on to bank even more. Many went on to bank, and that doesn't even include the futures. All right, so cooking here, I felt confident that we would get a move, that we would get our move on Monday here if we were going to. And like I said, in the next video, I will do the recap. I'll show you the thesis. We'll talk about some of the levels here. And you'll see that obviously you can't make this stuff up, right? So I won't adjust anything. I'll show you the levels channel. You won't see the levels, but you will see the thesis there. And you tell me, did we work out? And the timestamp is on there too. Was posted before the market. Tuesday, employment, cost index, Case-Shiller home price index, more housing price index, PMI, and consumer confidence. It's going to be up. After that, Wednesday, Treasury refund announcement, ISM, JOLTS, FOMC, and then, of course, JP. All right. Thursday, jobless claims. Friday, we'll wrap it up, non-farm payroll. All right. Federal Reserve, the blackout is over on the 31st, obviously. So that's coming up tomorrow and or Tuesday. So, once that's over, we've got Fed members back on the mic. All right. We talked about what the blackout was in our last video. Go watch it from our trade prep from last week. All right. So really, Barr is going to be on the mic 8 a.m. and 3 p.m., and that's going to be on Friday. So he jumps on the mic twice that day for different subjects and topics, but he's going to be on the mic Friday. All right, so here we go. What to watch for. Now, we can expect another busy week of earnings. Now, we've got McDonald's that's already reported at the time of this recording. But I have data points that I've already compiled for McDonald's, and it's really nice to see that it's already played out. So for me, you guys know I don't YOLO, I don't try to guess with earnings. I look at the setup, I look at their financials, and then if I want to add it to my portfolio or grab a swing, I grab it after the fact. And I do like McDonald's. They're on my list, so we'll talk about that. HSBC, Pinterest on Monday, followed by Pfizer, AMD, Caterpillar on Tuesday, Qualcomm, just to name a few, Airbnb, PayPal, etc. on Wednesday, and then Eli Lilly. We've got ConocoPhillips, Starbucks, Booking.com, and of course Apple, right, coming up Thursday. Okay, and then energy companies will take us to round out the week. Okay, as of Friday, this is last Friday, just under half of the S&P companies have reported earnings for the last quarter as we near the midpoint of the earnings season. Of these, 78% have reported an earnings beat, with the average result about 7.7 above consensus estimates on aggregate. And so the S&P 500 companies are reporting year-over-year growth in earnings for the first time since the third quarter of last year. So let's talk about banks and monetary policy. This week, central banks around the world, including U.S., Fed Reserve, BOE, Bank of America, Bank of Japan, will meet to set interest rates. Now, after the European Central Bank held its latest policy meeting on Thursday, the Fed, or the FOMC committee, rate setting committee, they will hold their 2-day policy meeting this Tuesday and Wednesday. There's no secret there. Now, the Fed is widely expected to hold its benchmark federal funds rate steady in a range of 5.25 to 5.5 for the second consecutive meeting after hiking interest rates 11 times since early last year in an effort to tame this really aggressive inflation, the highest in really 4 decades. So policymakers, including JP, have said that they intend to keep interest rates higher for longer as inflation remains elevated. Rates are expected to come down mid-2024 at the earliest, according to the data that we pulled from CME Group. All right, so let's talk about jobs then. Well, we'll get the latest updates on the labor market. Now, that matters to us in relation to monetary policy. It tells you the pulse of the economy, right? At this point, if you've been following along with me, you should have an understanding of that. And if you've taken my training and done the homework, you should have a thorough understanding, right? Or if you've been inside of Tier 3 with me. So beginning on Wednesday with the job openings and labor turnover surveys. That's going to be your JOLTS for September, which tracks the number of openings, hires, quits, and separations for a given month. Also on Wednesday, Payroll Services, provided by ADP, will issue its National Employment Report for October, tracking gains in the private sector payrolls. This will set the stage for a non-farm payrolls report on Friday. The U.S. economy likely added over 170,000 jobs in October after a stronger than expected gain of 336,000 in September, which marked the best month for job growth since January. That's good. You want people to go back to work. Now, if job growth beats estimates again by a significant margin, it would underscore the strength and resilience of the labor market, despite the impact of the Fed rate hikes. It would also suggest that the economy is off to a strong start in the fourth quarter after GDP rose at the fastest pace in almost 2 years in the third quarter. So that's significant, right? We're really paying attention to these. I mean, this is going to be a very volatile week, right? An update on home prices. All right, so we got to talk about that component of the market on Tuesday. We'll get the latest updates on the national home prices with the Case-Shiller National Home Price Index and the Federal Housing Finance Agency House Price Index for August. After declining slightly in the second half of last year, as the Fed rates started to take a toll on the housing market, home prices, as tracked by Case-Shiller Index, have now rebounded for 6 straight months, reaching new all-time high. I mean, this housing market it's just crazy. It's just crazy. The fact that prices are hitting new all-time highs despite soaring mortgage rates is a sign of how limited housing inventory is. So if you were in my Discord about a year ago, I advised those in the Discord to what I was doing. I didn't tell them what to do with their money, but I told them what I was doing. I invested in real estate and I made some moves back then. So if you made some moves with me, then likely you're sitting pretty on some properties and you can get top dollar for them. So nice job. As homeowners who locked in that record low mortgage rates early in the pandemic are reluctant to sell. That's when you wanted to build your portfolio up. Soaring mortgage rates combined with very low inventory, particularly for existing homes, have resulted in the least affordable housing market in almost 4 decades. But what's interesting is people are still buying at record numbers. That's what's crazy, right? Inventory is still low. All right. So you've seen the earnings report for the backside of, or for the month of October. We are in this week here, right? 30 through the 3rd. And these are our earnings right here that we're paying attention to. We've got McDonald's sitting there, sitting nice and pretty. That's already reported. We'll talk about that. BP, Marathon in there. Qualcomm is in there. CVS Health, Apple, Starbucks, and some others there that we really like to see. Qualcomm is in there too. Okay. So let's talk about it now. All right. So here are the earnings for the week. Now, AMD is an earnings. I'm spotlighting too McDonald's, which is already reported, but the setup is there, and AMD coming out. But I do like a couple of them on here, right? So obviously, I'm also watching Apple. I'm watching PayPal. I'm watching Roku. I'm watching Qualcomm for sure, no doubt about that. I've got my eye on Marathon, right? HSBC. That's an asterisk by that one. I'm just watching it here. But the others there, I look to take a position. I'll look to take a position on them. And then, of course, there's a little babies, baby pops in here that you guys can get. Okay. So let's talk about what's in some spotlights for me this week that I'm going to be looking at. All right. So McDonald's, let's talk about McDonald's and let's talk about AMD. All right. So McDonald's, they had a strong start of the year with the Dow Jones stock up more than 13% for the year to date. At the end of June, things started to go south, though, after there was jitters related to less pricing, cloudier traffic outlook, and healthier interest or higher interest rates, says analysts. So shares are down roughly 2% since the start of 2023, but analysts are still expecting the fast food company to report solid top and bottom line growth in its Q3 report due out, obviously, Monday today. Analysts are targeting even higher earnings at 2.96 per share. We did have a beat on earnings on McDonald's today. I do like the setup on McDonald's. And so I think that a position to the upside there. I'll put the levels and I'll put the targets later in the Discord in the private channel. But analysts, prior to them reporting, outperform or a buy rating. There's momentum there. And so I like the early morning sell-off and then a hold and run up. So earnings played out really nicely for McDonald's today. All right, so here we go. AMD will disclose its third quarter results after Tuesday's close. Analysts expect the chip maker to report about 64 cents per share. Now, these estimates are achievable, says analysts, due in part to improving consumer PC shipments. The risk, however, is in the company's current quarter guidance. While excitement around El Capitan, a supercomputer AMD is developing alongside Hewlett-Packard and Lawrence Livermore National Lab, could provide momentum for the chip maker. We don't know about that. I'm just from a nerd's perspective. It could provide momentum, but the press is still out on that one. It is less clear that AMD can hit elevated expectations, which we believe will eventually require better server CPU shipments in light of continued weakness in cloud service providers. One of the analysts, Bryson, made that note, and I agree with him. So that's why I put that there. The analysts, as a whole, have an outperform rating for AMD, just flat out on chip volume and demand. Obviously, back with the development of their supercomputer and AI. Okay, it's the equivalent to buy, and it's in good company with others. They also have a bullish outlook. Most folks on the street. 46 analysts following the semiconductor stock tracked S&P Global Market Intelligence. 25 says it's strong buy. 7 have it as a buy. 14 have it as a hold. I have it as a buy. They've got it as a buy. It's a buy. All right, let's get to the levels. What are the levels for the week? Okay, so here is the market right now. Now, we traded all this today. All right, even did some trend line training for some of the traders, and these are my levels right here. Right, I'm gonna even bring my area of interest, and I've got another major level down there. Boom, that's the levels right there for the week. All right, so let's talk about this. Area of interest starts at 4204, 4180, 4168, 4156, 4131. And this is what I'm looking at. Now, we do have the gap down here on the futures, right? But what I'm looking for as volatility and volume shifts, I am looking for a fill in this area of interest prior to FOMC discussion or announcement. So that by Wednesday, we need to come up here, test this area. And I wouldn't be surprised if we rocket it even higher. I'll share those levels higher in the Discord to clear some way for an announcement or some volatility, right? So these are the levels. That's what I'm trading this week. Now we'll talk about the trade plan in a minute and how I'm going to trade it. All right. So what are people saying about KD? What are people saying about the wealth wells? All right. Last week, here we are. Art of Noise said, this is the first of many testimonials to come. Believe it. So here we go. I have been trading in the Wealth Wells Discord as a killer well for 4 weeks now, and has required me to change my trading approach. I came in with 18 months experience with trading using major and minor zones only to find out I know little to nothing about trading. Zone trading didn't work for me, and I lost a lot of money behind it. Well, that's a no-brainer. Supply and demand zone junk. I stumbled upon the Wealth Wells Discord through watching YouTube videos and becoming a better trader using volume. After watching KD trade in the Discord, thank you for that, and taking courses 0, 1, 2, 3, currently taking 4 and 4.5, I have learned so much about the VVP trading system, and that using market sentiment, levels, and volume is the key when used in harmony with VVP. No doubt about it, baby. I believe that KD teaches us in the courses and the Discord. What he teaches is priceless, and it has shifted my confidence as a day trader from hoping that I can become a mid-six-figure earner to knowing I can if I continue to take the training with KD as my mentor. This was my first week where I stayed green overall. Now that's results. I had 2 days where I was in the red because I didn't use my stop loss for fear of how much money I was losing, and it created bigger losses. We had a conversation about that I couldn't make up for in the trading day. I reviewed my notes from KD regarding trading levels, keeping market sentiment in mind, using the VVP indicator and system to trade levels without the P&L in mind. That is key. And then he crushed it the rest of the week. Basically, he's 3 for 5 for the week, averaging 2 trades a day. Very nice. Best setups, key setups only. I learned that if my focus is on the P&L, I can create a sense of fear and greed. Everyone knows at this point, I teach not to watch your P&L. You need to focus on the trade and practice mindfulness. I have a small account that I'm growing, and I'm confident that as long as I keep taking the trading and training with KD and in the Discord, I will be well on my way to becoming a mid-six-figure trader within the next 12 to 24 months. I agree with you, Art of Noise. Thanks, KD, and I'm looking forward to becoming one of your most successful How I Went From Zero to Hero stories, and others like it as well. I agree with that. Thank you for your kind words. All right, so these are the indicators that we use to help us go to the next level. The links are below. The VVP indicator is not a lagging indicator. I have a script running back there. It's going to show you things that I want to see. It's best understood when you take training. And then we've got the volume profile. I've got shifts in volume for me that shifts. It's level 2 like data that moves with my script so I can see buy, sell volume, buy, sell pressure, etc. And when these two are combined, man, it is ridiculous how scary and much of a I dare not say cheat code, but boy oh boy, it's vicious. All right, so here's the free training, same one from last week. You need to watch it this week. All right, why are the indicators so boss? Why are they the bomb.com? The indicators work. Watch this video. You can get more about it. You can see what these shaded areas are. You can see what our different cues and signals are. All right, and then I can see the future. How am I able to predict price action? If you've been tracking me, you can see clearly it's there. You know deep down inside when you look at someone and you follow them, you know whether or not they're legit, and you know whether or not they can trade. All right. So the benefits of being inside this Discord is you, above everything else, I'm not here to make you money. I'm here to help you make you money. All right. So don't come into my Discord talking about, I want to make money and sounding like a jabroni. I'm going to kick you out. You're wasting your time. The benefits are you're going to learn how to fish, and you are going to come out of the market incredibly successful if you give yourself time. All right. So you need skill and mental development. Now, the only way someone can give you true mental development if they have been through the crucible, they've been there. You cannot regurgitate what you read in a book or what you heard somebody else say on YouTube or in a podcast to help somebody else. Now, you have to have been through this thing. So I know what I'm talking about. I can give that to you, market awareness, understanding your reaction times, patience, consistencies, and many other life skills that pertain to money in the market, best practices we teach and we train inside of the Killer Wells Tier 3 Access. The link is below. All right. So let's talk about our trade plan and how I'm rolling. All right. Like I said, I am expecting, I want to catch a move. If I see this volume hold at 4180, I am catching a move to the upside to 4200. I believe we test 4200. And then I believe by Wednesday, we chip around up in here and we get a pullback if there is some unfavorable news, watching the bond market as well and just watching earnings. So I think this is our range that we chip in. At some point, we will absolutely have to come back to 4131, no doubt about it. And we will hold for a moment at that level to see. So this is the week right there. All right. And I'm trading that. I will have other major levels in between. These are not all the levels. Don't worry about that. All of that is in the private channel, and we absolutely go to the bank. You need a target before you trade, all right? And, of course, we all know what bonds have been doing, ripping and dipping. So you need to keep your eye on bonds. We talk about that in the Tier 3 channel, okay? So, hey, we did it. Market summary, our events, we talked about that. Our levels, we talked about that. We've got the trade plan. We've got the training. We talk about what people are saying about us, and I'm giving you the tools you need. Hard journal, 90-day day trading journal. Get it? It's in the link. Then how to day trade with a full-time job coming out this week. All right. I give you my blueprint, what I've done, and then there's paired training that you can get with that. It's optional if you want. And trading indicators. You already have those available to you. You don't have to be a part of my Discord. You can grab them and you just come on in and you do what you need to do. All right. So listen, that's it. I want to thank you guys for watching. I'll leave you with this statement. It's never too late. It's never too late to be what you might have been. You want to be successful. You've been beat up. You've tried other things, whatever the case is. It is never too late to learn how to do things the right way and go to the top. Let's crush it this week, guys. I'm so pumped. KD for the Wealth Wells, signing out.